Hello everyone. Well, I decided to start this live stream early. I think the price action here is just too interesting to wait. And I want to cover a few things beforehand. So I'm going to share this link and we'll get started shortly. Hey everyone, hope you're all doing well. All right, give me 1 minute. Well, a big move underway after sweeping these lows. I do want to talk a little bit about how price developed and how we got here. But I should say that there is a key idea overhead. My general perspective here is I am bullish on the medium time frame for taking the range highs. But we do have to take out some local resistance first. We've taken out this resistance. We obviously took out our very local resistance. Went into up only mode. Key level is taking these highs. This is the 1 hour chart, but these are consecutive daily highs here. And if we reject from there, I may be willing to hedge short on a swing failure of these highs. So we sweep the highs, we grab that liquidity, we reject. There's always the possibility of another retracement, another lower high. But I probably lean towards this being more likely, but just going to play key levels. I'll talk a little bit about the concept of hedging in this video versus just closing your longs. But one of the reasons I started this live stream is so we could, a little early, is so we could cover a few things. And there's always the possibility, just with how price is moving, that we sweep these highs during the live stream. I wouldn't say it's super likely, but we can talk about some stuff and then maybe cover that move if we get it. All right, so let's just talk quickly about, how this all developed. And hopefully we can learn something here. So before price broke down, obviously aware that we had left a lot of untapped highs here. Seemed likely we were going to take them, but we did start developing some bearish order flow here. And specifically here, we had a really nice key level with a bearish divergence. And so I'm just going to cover, how this price action progressed, because it's actually not that uncommon, and it's something that you guys might be able to keep an eye on in the future. Some of these potential signs for certain things being more probable than others. So let's go over to Discord briefly here. All right. So we're going to scroll up. You'll see I do give a lot of updates in the Discord. So this was over 24 hours ago yesterday. Was preparing, knowing that those local lows were close by for swing failure long, taking those range lows if we got that quick move down. And I was just giving a reminder, the analysis isn't about trying to guess where price is going to go. Yes, we can use some things to shift the probabilities of one thing happening over the other, but we're just waiting for key technical setups. And so this was 24 hours ago. We had a local bearish divergence here. I'll point this on the chart quickly. In order flow, I was saying that I usually use these for scalps. You see lots of longs opening here, getting absorbed, and just pointing out, explain that divergence on a couple time frames there. So we get that clean rejection from there. Now that sends us down to the lows of the range. So all that divergence is showing us is, hey, there's some pressure being put on price. That's here. This is the 1 hour chart as we're ranging. And so to prepare for, at the very least, the potential of that quick move to the downside to potentially grab a long. I did scalp that short. I like using, something like a simple fib retracement. We obviously have some local highs to sweep there, big bearish divergence to look for scalps. But here we sweep the range lows. And so I think what happened here was super interesting. There's really a lot to take from it. So if we go back to the Discord, so I took the initial swing long here on the initial reaction. That was yesterday, again, 24 hours ago. I said I was going to probably stay up in case we don't just V-shape recover and we end up ranging and potentially sweep the range lows again. We've all seen both versions of that price action. And what I noticed here as price was consolidating is we're grinding down with some slight bearish absorption forming locally. I said that's making another test of the lows more likely. Again, that's about 23 hours ago. So then just watching order flow closely and noticing that we have a $9 million long open and price doesn't move at all. Okay, so that's a hint. That's quite bearish locally. And it's a hint that somebody's trying to press price down, either much lower or at least to sweep the liquidity of everyone opening longs in this consolidation after the initial reaction. I said I would call that an extreme anomaly in order flow. I'm not common seeing that. And I made the comment / joke. Hopefully he's packing a lot more heat to follow up against whoever absorbed that. You don't want to be caught in that position where somebody's absorbing that much market buying pressure. Then we had Coinbase actually nuked on the 5-minute chart well before all the other exchanges. So here's another confluence for looking for lower. Coinbase has got that wick to the downside. We have those bearish divergences, thinking, maybe that initial sweep, and just to go back to the chart, maybe this initial sweep isn't so likely to hold as we're consolidating here with bearish absorption. Coinbase has already got that wick to the downside. So anyways, might make sense to look for that move to the downside. And then also be prepared for deeper levels if we do break down. So we could either sweep and reclaim, we could break down. You want to be prepared for both. And just saying that, whether you want to use this data, this is before we got the last sweep, to close your longs, hedge them with a short. That's a decision that you need to make. I opted to hedge short. So you can see here, I took a hedge short targeting a sweep of this low again. That puts me in a more comfortable position. I said primarily because of this super bearish absorption here. Someone trying to hold price down. It may not work, it may work. And I'm going to talk about hedging a little bit because it's a valuable tool, at least a valuable concept. Just pointing out how extreme the divergences were here. And the divergence is just caused by, you have CVD showing you aggressive market buying, getting absorbed by limit selling. And it would take a pretty big trader to be absorbing all this buying pressure. I think we had like 45 million delta on this exchange that was absorbed. All right. So here, saying price coming down to retest a swing failure low. This is a technical idea, but I would say the bearish absorption hasn't played out yet, still holding short. The bearish divergences get more extreme after a minor sweep here, and we'll look at that on the chart really quickly. And this is a theme too. Sometimes I'll stay up all night to catch a move, which I did last night. And I just want to navigate that price action effectively, and only to find that the move comes when I would have woken up anyway. So loss of sleep there for no reason. So again, we haven't swept the lows yet. I'm saying I don't want to mince words. Order flow looks extremely bearish here. I'm fine to accept that it's possible we break out higher. but there's lots of longs opening and getting absorbed. I said price action looks good for longs, but order flow looks very bad. So explaining why I'm willing to hold that short and noticing where all the longs are here. I was discussing with somebody else in just the general chat there that, you know, we're shorting this. There's this little descending structure here. And I'm explaining how I'm trading this. I have that short from up here that's covering me. If it gets stopped at break even, I'd move my stop to break even. That's fine with me, but I'd feel more comfortable having that short running given the bearish divergences. All right, so we get the big move to the downside. We sweep those lows. We have this was the trend line I was shorting, scalping short. I'd shorted initially up here. I was scalping this. This was a very quick reaction. Just pointing out that if you missed the reaction that happened in about a minute from the sweep of the lows, you could try longing just the break of this trend line. That's reasonable, just as long as you're using risk management. That trend line did break. And now key levels overhead, the local the local highs where I had initially shorted to sweep these lows. If we break and reject, that could be a sign of weakness. If we break out, sign of strength, looking for potentially an up only mode. And so I did hedge a short on this rejection here. We had about 8.7 million longs open there. We rejected. And just explaining that typical bullish price action would be to break those highs and then go into up only mode. So if we broke them, I would not take hedges anymore. And then I have to take a nap because I was up all night and might need to go into a coma. And we basically got to where we are. As we were taking these local highs, I said, I'm not fading that level. I'm expecting these highs probably to be taken. Not going to short it. And anyways, explaining the level I'm targeting to the upside, which we are approaching now. So anyways, let's go back to the charts here. We've taken these highs. This was the level I said I wasn't fading. This is the initial bearish divergence before the move down. We got the reaction. We grinded around here, but showing massive bearish divergences forming here. I was holding through here. There's a nice little trend line to scalp short here. And you can even just see this really grindy, rounded price action as price comes down to make another impulse to the downside. Very quick reaction here. This is the trend line I was saying that if broken could be used as a long trigger if you missed the reaction off the lows. This is where I took my hedge short. And the idea of a hedge is, well, I want to hold my long. I stayed up all night to get a nice long entry. I had the initial long. I hedged short because I saw that we had bearish divergences here. I want this long, and the long target is to the highs of the range. So I have an option here, is I can either close part of my long, take profits off this reaction, or hedge short. And if my hedge gets stopped out, then my full long gets to carry, and I don't take any profits off of it. That's what I opted to do. Had I been awake, I went to sleep here, it might have actually been prudent to notice the kind of retest of this descending trend line that we were consolidating under. That actually could have been a nice long trigger as well. But anyways, I was asleep. Price broke out. I did explain that I would just look at this horizontal break as a key sign of strength. I shared that on Twitter too. And I shared this short on Twitter as well. But a sign that we could go into up only mode, because that is typically what happens after that bullish sweep at the lows, and then price just starts moving up, no significant retracements. So happy to be in a long. I think ultimately really I put a lot of work into navigating this price action. Couldn't really be happier personally with the outcome there. Part of me wouldn't have minded being awake and maybe willing to long some breakouts here, because the probabilities become very high. We've swept a lot of liquidity to the downside, been consolidating here for a week. Certainly reasonable to suspect we could get an aggressive move to the upside. So we could consolidate here. A sign of weakness, of course, would be bearish absorption forming locally and maybe lose these highs again. But even something like this, I would probably look at it as a potential long opportunity until we've swept these highs, because there's a lot of liquidity up there. It seems reasonable to take it. Now, if I shorted this, the hedge would be, range highs are a nice target, but the hedge would be maybe another lower high, and we come down and take this liquidity again into this trend line. And so I'd be willing to play both sides of that, of this range. The potential of a lower high, the potential of continuation. And I have a lot of room to make a decision what to do with my long here. But just looking at key levels, I think the structure here is very simple. We really just have key horizontal consolidation highs, sweeping this high. If we break out, well, there's no structure here. Very likely we carry on to the highs of the range. Something like this is always possible as well. Almost the exact same thing we got in a low time frame here. Maybe we reconsolidate on this trend line and push back up to the highs. But I'm just going to play these key levels and willing to hold my longs for now from lower, but use hedges or shorts to navigate key levels here for potential retracements. We can look at order flow here. I think that's there's some important perspective here. All right, so we're going to look at the 30-minute chart here. So this is what I would want to note is in this range and this breakdown mini range, we formed pretty significant high time frame bullish absorption as price has consolidated here. I've been pointing that out for a while. We have bullish absorption, bullish divergences against our 24.8K lows. And so now here as we break out, we do have some local bearish divergences forming between these highs, but it certainly is not hard to imagine that price just continues moving up through those, because ultimately the divergences are insignificant compared to the higher time frame bullish absorption here. So I'm just going to play the key levels. We do have quite a lot of liquidity being grabbed here. So something to always watch out for, where your trades are the highest probability, is these really high volume. You see 106 million here, negative delta 18.5 million. These really high volume wicks to the downside usually get strong reaction. So after a reaction starts, it's usually a high probability trade. That's a very high volume 30-minute candle. Ultimately, we did come back down and sweep the lows again, 74 million, 41 million. And we do have some high volume candles to the upside here, 55 million, 31 million, 35 million. But there's no reason for me to short this while we're breaking out of these local highs. This is a breakout. It might not sustain, but right now there's no weakness. So my perspective here is I don't want to let my bias take over here, which probably leans to the upside. But we have reasonable levels to play. These highs could be in play. Right now we've moved quite a ways beyond them, so I'm not going to spend a lot of time thinking about them. If I was to be a betting man, I would say this level is going to decide a lot. It's not to say we can't run it, maybe retest it. But if we can't break out of these highs, this becomes a lot more likely. As soon as we break these highs and claim them, the highs of the range become very likely. These quick structuralist moves can get retraced very quickly. I think we've all seen examples of that. There's no structure built, and then price moves through the area of the chart very quickly. Someone says, CB says, hit the likes on YouTube. I don't think I've ever said to like, comment, or subscribe, but you are more than welcome to. I don't really know if the algorithm picks up technical analysis live streams and people stumble on them on YouTube, maybe. I figure anyone watching is probably adjacent to the community in some way. So it can be, what I want to say is, it can probably seem challenging to navigate this price action, and I won't say it isn't, but certainly here, at the lows, there were a lot of reasonable clues to see another wick to the downside. We had that Coinbase wick that came well before, somewhere around here. We had bearish divergences. Now we don't know if price is going to reclaim the low. It could just break down, but when you see that quick reaction, that can be a long trigger. Just play it with risk management. For me, it's just super important to navigate these key levels, the major levels, accurately, because that's where a lot of your money as a trader comes from. Yes, you can do some scalping. I did scalp. I posted this in the members Discord. I did do a scalping session on Rollbit here, and the reason I was scalping on Rollbit is I've been testing their fee structure. I actually think it's great for scalping. It's really bad for swing trades. Like this trade would be terrible to take on Rollbit. But I was able to run an account from $2,000 to $6,000 in 45 minutes. So you can make money on lower time frame price action. But to get in those positions, those higher time frame positions where you can put it on, sit in it, make money while you're sleeping, like I did in this case, that is the ideal scenario. The problem is you don't have major levels at play every day. Sometimes you have them once a week, twice a week, or in the case of what has been very low volatility price action where we've ranged in a 5% range for a month, you're not getting major levels for almost a month. You're just getting sweeps of range highs and range lows. But I would say in the context of the last month and a half, this is a major idea. In the context of the last year, maybe not so much. This ascending structure would be a major idea, and sweeping these highs is a major idea. Which I should note, that is going to be my major swing short idea if we sweep and reject from these highs. And ideally, I can hold this long as a hedge and only close it if we start actually breaking down. But if we're consolidating here, I might just hold it in case we run out through these highs. But there's certainly some reasons to suspect if we can get a key high here that we could see a major reversal. I've covered this before. I won't spend a lot of time, but my S&P analysis is playing out very nicely from last year. The high time frame analysis. So we're coming up to the key ideas here for a potential bigger move to the downside if this whole structure plays out. We would suspect Bitcoin might follow, and at the same time drew this channel last year for the DXY. Not a perfect interaction with here, but essentially drew price coming down and tapping the channel at the 618. If you know about the inverse correlations of these assets, then hey, if we do get a bounce here on the DXY, the S&P pulls back into more of a sustained move. I know this looks very bearish. I'm just saying it's possible. I'm not saying it's going to happen. It could make sense to be looking for swing shorts on Bitcoin, which has been lagging behind significantly. So maybe we do get that quick wick up through the highs. Something like this, there would be a lot of FOMO. We get a high volume breakout here. Lots of longs opening into resistance. And we get something like that. So that's a possibility. That's my major idea I'm still looking at, is to short a sweep of these highs. And people will always say that a level is so obvious. They'll say like, oh, everybody's looking to short that high. Price has a way of getting to an obvious, quote unquote obvious level in a way that makes it very hard to trade. Even something like a sweep of these lows. Lots of people would have wanted to long a sweep at this lows. Lots of people tried, and we had that consolidation. But then price comes, wicks everybody out, and then moves very quickly away from that level, making it hard for people to trade. So anyways, I think a really strong, bullish, up-only move into this level would make it very hard for people to trade. It would just look so bullish. A little rejection, and then just a fast reversal. I think a lot of people would miss that short. So I'm willing to take it with risk management. All right, well, you're not going to like this answer, Errol. Errol in chat saying, can I hear a very short yes or no? Should I put money into Bitcoin right now or wait? You know, this kind of reminds me of, like, you'll see, like, in Congress or political hearings or something, people will say, they'll phrase a question, they'll say yes or no, and then somebody tries to give a nuanced answer and they say no, 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 yes or no. It's like, well, I'm not going to answer that with a yes or no, and here's the reason. I'm a trader, so I will change my thesis based on new data that I have available to me, and I'm trading key levels. If structure holds, I'm holding long. If we break out, I'm holding long. If we reject, I'm taking a short or I'm taking profits. And so what people want is they just want somebody to predict the future and say, like, oh, Bitcoin's gonna go up, you know, go long, and they're feeling FOMO, they long, and then days, weeks, months go by and they're not looking at anything that's happening. Or Bitcoin's certainly going lower. You know, it's kind of like people who were bearish down here have just been bearish the entire way up, and price is up 100%. I'm not just sitting in a high time frame thesis. I'm a trader. I look at the charts every single day. I look at the data available to me every single day, and I make decisions accordingly. So I would say that, you know, right now, I don't know, you know, Errol, I don't know what your goals are. If you're wanting to catch the next Bitcoin bull run, you know, that's up to you. There's a lot of risk here, obviously. We've been going up only. We have this key high. Breaking out of this would be a nice sign of strength. Rejecting would be a sign of weakness. If you're looking to take a day trade, well, I'm never taking a position personally without invalidation and risk management. So how the average person is going to be looking at Bitcoin is just Bitcoin. I want to catch it before it goes up. I'm not thinking about Bitcoin. I'm just thinking about technical ideas on a chart. So I wouldn't care if this is Bitcoin or some stock or some other commodity or even a random altcoin. I'm just looking to trade high probability setups like these liquidity grabs, key technical retracements, and I don't really care what price does. So to answer your question, should you buy Bitcoin, yes or no? Well, the answer would be yes if, the answer is yes, if you want to buy a very volatile asset that's very speculative, that has the potential of running much higher, but also has the potential of putting you in deep underwater over the next few months if we do reject from here, and you're comfortable with that, and you don't want to use a stop loss and validation or anything like that, then certainly you may. But personally, I believe in trading technical setups with invalidation. So, like, for example, this is just very simple. If you're long here, you know, call this a 10R setup, widen it up to this reclaim here. The idea here is if we bounce and we claim this level, you're long, you make $10 for every dollar you risk. If you break down, you cut the position and reassess. And maybe you get stopped out and price bounces. That's the cost of doing business, I suppose, and you miss another long. But that's the essential idea of technical trading. If price comes through the highs, take a short. I'd be targeting, as crazy as it sounds, down into the 17K region. You know, let's just say I take a wider stop. I make $15 for every dollar I risk. If it breaks out, I take a stop loss and I move on to the next setup. So Errol says, perfect, thank you. Do you have any buy and sell notifications to your viewers? As far as in the members group go, I do share the setups I'm taking and really trying to, I'll just give you the general makeup of the group there. So it's all based around education. So I have educational content going over specific concepts that are used. And then I navigate live price action with those concepts. So if you've gone through the educational materials, you're looking at the updates, I'll say, you know, I'm looking for a short setup here that for this reason A, B, C. If this happens, I'm taking the short, or if this happens, I'm taking the long. This is my invalidation. Because I think it's important to cement those ideas by navigating and showing how you would use them on live price action every day. Now, do I want, the problem is, do I want somebody who doesn't know anything about technical trading, risk management, position sizing, to be trying to copy my trades? Certainly not. They're not meant to be signals. Now, after some members spend some time there, are they going to start trading similar setups and understand those setups and maybe use them as confluence for their own ideas, or just because they don't have time to be analyzing the charts on those time frames? Certainly, people probably are taking those trades, but I would just say that trading is really complicated. There's a lot of educational materials in there. What I don't want people to do is, if I'm taking a long here, for them to use that as a justification to enter into even a spot position or a leverage long position without a stop loss, without invalidation, saying, you know, you longed here, you said price was going to go up. Anything can happen. I'm never saying price is going to do anything. I'm going to long with risk management, and then they get liquidated because they're trying to use a technical trading system that uses risk management, and essentially the idea is you're putting the risk reward in your favor. You win more than you lose when you win, and hopefully you have a higher than 50% win rate, but you don't really even need that. As long as you're winning more than you lose by some meaningful margin over time, you're going to be a profitable trader. But I don't want people trying to use that to just enter random positions without risk management and validation. It doesn't make sense. You can certainly use technical ideas for swing trades, you know, for high time frame theses. Like, for example, if price, I won't go into it here, but I have some ideas, some Elliott wave ideas, harmonic ideas, some more simple ideas of price taking these highs and then coming back down to this level. Now, if we get a nice reaction here, you have a long, maybe your invalidation is here. Could it make sense just to hold that long for many months? If we start moving up and maybe target 50, 60K, certainly. It's still a trade. Even if it's just a spot position that you are just holding for many months, it's just a swing trade. It's a high time frame position. There's nothing wrong with taking those. But would I see this here as the best place to take one of those positions? No, not saying we can't go much higher, but to open a long here and, you know, go all in on Bitcoin with no invalidation seems a little risky. Pretty much any other time in the last year would have been better. Jonathan's asking, essentially, do I suggest that traders try to develop their own system, or try to use to apply techniques that have already been proven to work? Well, I would say this: it's very hard to produce an edge in the market, but a lot of that's style and execution. If you see like say you learn some tools and you learn some certain setups, and you want to go use those, back test them. You want to say, okay, well, let me go back test, something like these sweeps of these lows and sweeps of highs for shorts, for longs, stuff like that. To take that information, back test it, and deploy it into your system, I think is probably smart. If you see something, if you learn something, let's say you learn it at the LATF, that makes a lot of sense to you, that you understand, that you feel generates either high probability or high risk reward trades, it would be silly not to utilize it, just because you want to create your own system. There's no sense in doing that if you have identified something that's an edge, just for the sake of making your own system. But every system can be, all of these, let's call it not even a system, let's just call it these concepts, they can be traded in different ways, and there's different styles, there's different time frames. Some people are going to prefer trading higher time frame swing positions. Some people are going to prefer trading scalp setups, lower time frame setups, day trades. Some people are going to prefer using hedging. Some people are going to prefer just using aggressive take profits. And some people are going to prefer widening up. Like, for example, they would prefer to say, I'm not going to long this reaction. I'm going to long a break of these highs with a stop that looks like this. They would just prefer widening up the setup, waiting for more signs of strength, trading them as smaller risk-reward setups. All of that is perfectly fine. It comes to, as far as style goes, I would say I have a very aggressive style in the sense of, like, I'm trying to, with my positions, I'm trying to trade them as accurately as possible. So, like, I want to try to scalp this wick. I want to try to long this wick. But of course, you don't need to enter at the exact low or exact high of a move for the trade to make sense. I understand that me doing that, I have to invest a lot of time and effort at key levels to execute that trade. So I would say that, for example, the ideas I use and have identified as high probability setups can oftentimes, not always, catch exact highs and lows of a move. And so those could be used as a template or a foundation, but you could build a different quote-unquote system off of those ideas. So you could say, like this: we've swept, we have the liquidity grab, I didn't long the bottom, but now this is a higher time frame idea. I'm looking for a market structure break, a minor retracement, whatever it is, to get long on a different time frame here. I don't need to long this wick, or I don't need to short this wick. I could even look to short a breakdown here if you wanted to change the makeup of the trade a little bit. So yeah, I would say that generally you shouldn't be embarking to generate your completely own technical ideas. Like, for example, I use a lot of concepts in Elliott Wave, but you should develop your own style that suits your life and your time allocations and what your own personal goals are as a trader. It's a long discussion. It's been had. Casey asks, can you explain why you use inverse perpetuals on Excel charts instead of perpetuals? As far as the pairing I use, this discussion's been had many times over the last few years in the Discord. Essentially, I trust the data more than, in particular, other exchanges. I believe that, and it's somewhat confirmed by ExoCharts themselves or some employees I just found out, that, like, Binance manipulates their order flow data. That's been a belief of mine for a long time because it never makes any sense. Like literally things that, if you understand order flow, are impossible, are happening with price action. Like it shouldn't be possible. I couldn't even wrap my head around how it's possible that order flow would look the way it looks, considering what's happening. And I did see some posts that somebody shared of an ExoChart employee saying that Binance order flow is just nonsense. Like the data is just random numbers. Was their opinion. So I'm not accusing Binance of anything, but that was some confirmation to me because I've observed that for a long time. So I use the pairing I use because to me it offers the most consistent results. Is the long and the short answer of it. And the reason I don't like to get into these, not that I don't like to get into these discussions, but I've had so many of these conversations about order flow. Like somebody will say, well, why not use Binance? Because shouldn't you use this Binance with this pairing? It's the highest volume. Wouldn't that be the most accurate? I say, well, I don't trust the data. I've been looking at order flow for years. That's my opinion. It's like, well, why don't you trust it? Well, I think I should be using that. It's like, well, you can do whatever you want, but like go back test it, forward test it, put in years of work and figure out what you want to trade. But it's like, I don't really care what people use, but I use the ones I use, and I don't use the ones I don't use for a reason. And people can say like they don't agree or they don't think that should be true, and that's fine. But then collect the data and make your own decisions. So I'm just saying that if you're using different order flow from different pairings, different exchanges, that's perfectly fine if you find it is reasonable and gives good quote-unquote signals. Calvizi is saying, locally, would you take a hedge short if we reject back into the range? Honestly, probably not. Not on the initial reaction. If we do something like this, if we develop some structure here, wouldn't that be something? I mean, anything's possible. We've seen price over and over and over again go straight up and straight back down, straight up and straight back down. And one of the reasons, that is the reason that we were in a range for a month. Pump, dump, and we had some really aggressive ones. So I think the inclination here would be, well, just short because that's been the makeup of price action here. But I'm willing to just sit and let price action play out here. I could be giving back some profits on my longs, and which does bring me to the next question somebody asked: when would I move my stop up in a winning trade, or down if it's a short? Well, if I'm long from here, it certainly doesn't make sense to me to just keep my risk intact under this low. I mean, if price is coming all the way back down here, at this point I would hope I would either have taken profits on some weakness, or just be out of the trade or be short. But I'll give an example here. Because this was a low time frame entry, I move my stop to entry early on this wick, or to break even, understanding I could get wicked out and have to re-enter. But the thesis of this trade is, here I'm taking it before this move downs happen. But as price starts moving towards my target, well, I ideally wouldn't like to see price come back up through my entry here. I would like to see my target hit, price is moving in favor of my trade. So I think it can make sense to, on this time frame, even after this initial reaction, to move my stop to entry if I want to hold it, if I haven't taken profits. So The main premise is you want to let the level resolve. So like what you don't want to do is, let me find an example here. Let's just say you were shorting the sweep of this high here. What I wouldn't do is take a short here, and then as soon as price comes down a little bit, move my stop to entry and just get stopped out before the move. The level certainly hasn't resolved. There's been no retracements. Now, after price has broken down, I think was this a short I took? I can't recall. But after price has broken down and swept these lows and you have a reaction, whether you've taken profits or not, it could make sense to bring your stop into entry there. So it's just sort of, it's a little subjective, but the answer is not too quickly and not until price has moved away from the level you're trading on the time frame you're trading it at. I'd say it'd be very hard to say, on this initial wick on the 15-minute that this level's resolved, price has moved away from it. You're very likely to get stopped out if you're putting your stop to entry as soon as price ticks in your direct favor. But after some market structure breaks, some reactions, well, then it can start to make sense. You really wouldn't want to see price start coming back up to your entry here. So I think, yeah, maybe the simple answer is as soon as price has tested the market structure of the time frame you're trading, so you're in a range, you're making higher highs, higher lows, and then you make your first lower low in that time frame for a potential higher low into the golden pocket. Well, you'd like to see that structure start shifting more bearish. I wasn't planning on looking at any alts, honestly. I just wanted to cover Bitcoin for the gentleman asking about altcoins. I'll say this too. I want to add a couple easy. You asked would I hedge short on this rejection back into the range. I really don't. The reason I don't want to is, like, if we are objective here, yes, price could come straight back down, but we have been consolidating, making lower lows, certainly, with nice wicks to the downside, but lower high, lower high, lower high. We've just taken our first lower high. We were consolidating here for a week, a major reaction off of this sweep, and now price is just going straight up. I'm really not in a hurry to short this move. I'm not thinking it's the most likely outcome that it could happen, but that price just comes straight back down. And so I'm just not looking to take aggressive shorts here. I take them higher, or if I get some consolidation, bearish absorption, maybe a sweep of this high into this trend line could start as a scalp. But yeah, I'm just not looking to short anything aggressively here. And I know it's hard to believe because we've been ranging here for a month. But sometimes price does have an initial impulse and then just carries on for much bigger moves. It's been a while since that's happened, but this would be an okay spot to consider it being a possibility. And the other thing, Calvuzzi, is that prices move quite far from this. So you're even back to the lows of the range. It's a 2.7 hour setup as a swing failure. It's not ideal. I would hope that if I want to get short, I'd find a different setup, a local setup on some weakness. Well, anyways, I wanted to get live a little early here to cover a few things for the potential of us taking this high, because when I started the live stream, price was going straight up. I didn't necessarily think it was super likely, but it was possible that we just have that quick move squeeze up. I would say that I will be keeping an eye out here for some consolidation and to look for adds to my longs. If order flow looks good, get some local range structure, a sweep of some local lows, probably be looking to add to longs. I'll need to have some specific setups for that to take aggressive longs, but I'm certainly willing to try if I get those setups. Interesting. But yeah, if we do break out here, obviously I'll be giving these updates in the Discord certainly, and maybe on Twitter, but for those of you watching that aren't members, if we sweep this high and we reject, another idea here, let me get rid of the unnecessary squiggles, kind of a bit of a higher time frame idea. Maybe we break out of this little descending structure, sweep the high as we reject. I'd be looking at a retest for a potential long as well. Won't quite have it. Be the 0.5 fib approximately, depending on where the high comes in. Yeah, I don't think it's a bad idea. Would be looking for some confluence there, certainly, in order flow and maybe some local structure, but that might be a nice place to add to longs. Yes, I do have some Elliott wave ideas. They are shared in the Discord and they're shared on Twitter. And they kind of the problem here with some of those ideas is it's not 100% clear to me what this corrective structure is here. But the high time frame perspective, in that count, which hasn't been playing out perfectly, but would be that this is an A, B, and then we have a C leg down here into our 1618 region. But maybe allow for a little bit more volatility. I think that's an interesting idea. And then having a bigger move from there. But we'll see. There's lots of possibilities. I did have a lot of my analysis deleted. Sometimes TradingView just deletes all your files and folders, which is unfortunate. I'm going to have to regenerate some of it. All right, well, I think we've pretty much covered everything here. I just want to take one more look at low time frame order flow here. Just get a sense of what's happening at the top of this candle. Right now we're breaking some key market structure. Getting reaction certainly. Still some resistance to contend with. Very interesting. All right, well, we can just look at a couple things here. This is the 5-minute chart at the top. some kind of short squeeze. This is primarily a short squeeze on the way up here. Open interest decreasing, CVD increasing. A lot of longs opening up here. Price making a much higher high with lower high in CVD, and some potential bullish absorption forming here between these lows. But it's just interesting to note, some pretty low volume 5-minute candles up here, and not a lot of aggressive buying pressure coming in here. From this high, we're not seeing people longing into it. We're seeing shorts opening, increase in open interest, increase in negative delta, or you could say decrease in delta, going from about 1.5 million, negative 1.5 million to negative 6.2 million. So people are shorting and selling into this move. And so far there's a little bit of bullish absorption forming. Actually, this is... Let me just look at something here. I'd say higher is still probably more likely than lower. I'm just looking at the 1 minute time frame here. Just want to, you can mark out these local levels. Is this the golden pocket? I'm just curious. They're scalpable. It's not quite a perfect trend line here. It would actually be interesting, like this might be an interesting scalp short, and this would be an interesting scalp long. To come sweep these local highs, sweep these lows, and I might be willing to scalp those. They'll be very low time frame trades. You'd want to wait for a reaction and not a breakout there, but it might offer some nice setups. Well, I hope this was interesting for you guys, and hopefully educational, useful. Maybe you learned some things that you can take with you. Yeah, unfortunately, there's no easy way to navigate price action. You got to put a lot of work in around key levels. My perspective would have been, like, my perspective shifts a lot based on the data I have available. Like, for example, when I did that scalping session where I 3x that account, my perspective initially here was to short, but as soon as price wasn't breaking down here, I just flipped long. I caught this move. And the idea here as well, my initial perspective is, well, long the sweep of this wick, but as this data becomes available, it's like, okay, we'll prepare for another sweep of the lows. But I'm saying that it's not necessarily easy to develop the experience to navigate all of that. But there's no such thing as a perfect analysis or certainties, just high probabilities. But I think I might end the live stream here. I hope you guys found it